Hey everyone, it's Evan here from the Trade Risk on Friday, April 13th, here with a weekend market recap video. We're going to cover all the major markets, the current market environment, and then finish off looking at some sector analysis. So it was a nice, strong week there for markets. All of the major averages up 2% this week, right across the board. Although the S&P 500 is still struggling at some resistance. It got up there to resistance earlier in the week and was just attacking it all week, but couldn't quite close above that 2670 level, I believe is the area in the cash market. We're going to look at that in the charts today. And we also saw commodities basically across the board rallying pretty nicely this week. The dollar was pulling off, so we had a little bit of a tailwind there. And we saw some nice gains in our usual gold, oil, natural gas, and even some of the other softs did well this week. So lots to cover. Let's jump into it with this week's market recap video. All right, let's jump into the charts here. With the S&P 500, we're looking at a weekly time frame on the cash-settled S&P 500 market. Each bar represents exactly 1 week worth of trading on this chart. And this is a chart we've been looking at quite a bit and sort of hammering it over everyone's head to look at this perspective here, look at the bigger picture time frame before you start to drill into the daily noise. So I think we are probably well-versed if you've been watching the last several videos. We've been kind of discussing this time frame. But to recap the important points here on the longer term chart, which is this weekly chart, we are still holding above critical 2585 support. We did undercut that last week. We bounced and reversed from that level, and now we are seeing follow through to the upside to last week's reversal off of these lows to the upside. We finished up 1.99%, but you can see here we are still struggling to get above the past 2 week highs here, which comes in right around 2670, 2675 or so in the cash settled market for the S&P 500. And conveniently located are these fast moving averages, which are flatlining in the same exact area, right around 2670, the blue and yellow line, 8 and 20 period exponential moving averages. And we still have this sort of structure here of, at the very least here, a consolidation phase on the longer term time frame, but also potentially, you know, looking at this a little closer, especially on the daily chart, you start to get a series of lower lows and lower highs, this downtrend in here. And you could actually extend, say, the trend line from these recent highs here. You can see the consolidation that's taking place. Perhaps this market does have some more of a rally in front of it to get back up to this 27 and change level to retest this downtrend line from the highs made in January. But that is still yet to be seen if we can take out this resistance and get up there. So that is the long-term structural standpoint on this market right now. Consolidation, still holding above support, and we are basically sandwiched in between the short-term resistance here in the S&P 500. So now if we go down to a daily chart, we start to look at these levels a little more acutely here, and it was sort of a messy week of trading this week. It was messy last week. It was messy this week. We're getting a lot of kind of noise back and forth here intraday and into the closes. So here is what happened. We did have we did put up our midweek video on Tuesday. So we did discuss price action here on this session right now, but let's dial it back a little bit more. Let's talk about Monday's session. And Monday's session is when we started the day off a little bit with this gap higher here, but then we saw this nice kind of fierce rally to the upside, got all the way up to 2650 or so, 2650 and change, which was about 2% or so of a rally, almost 2% in the S&P 500. But notice the fade here into the end of the day. That last hour of the trading day, we started to really unwind, fade back down towards and close at basically the lows of the session. Tuesday came around, we saw a nice gap back up, and we saw a strong close above the prior 2-day highs. That's when we did our midweek video, and it's pretty enthusiastic about the long side there. Still said there's things to be worried about, but I like the prospects of the long side here, given the fact that we did see this very quick recovery and kind of magnet right back to these highs. We closed above the past 2-day highs, I thought that was a good spot to see the bulls really start to squeeze this market to the upside, fill this gap in here from back on the 22nd, and really kind of just catch this nice little pocket of momentum. But that didn't happen, certainly not as neatly or as quickly as I would have liked on Tuesday, because the very next day on Wednesday we saw the market have an inside day. It tried to rally up, but ultimately closed again with this fade here off of the highs, closed near the lows of the day. Sellers got no follow through. We popped right back up on Thursday, closed above the past 2-day highs, giving another sort of breath of life for the bulls to once again start to rally us above this resistance here. And then again on Friday, we saw a gap up and an immediate failure. The open of Friday's session was essentially the highs across the major averages and lots of individual stocks. We sold off. We went red on the day, and then we ended up popping up and closing off of the highs here. But still, more reluctance to sort of get above and definitively close above this 2670 level in the S&P 500. So I have a short position now in the S&P 500. I took the bait here on Friday to establish a short position. Let's go to, I think my keyboard is dead, so I'm going to need to pause this video and replace these batteries. So I will be right back. Okay, I am back here. Batteries have been replaced. I think we're good, back in action. So we're looking at a SPY chart now. So S&P 500 SPY ETF. 266, that is approximately where resistance is. That's the resistance area we were just talking about in the cash settled market. Maybe it's 266.50. You could cheat that up to 267, but more or less, this is where the market's been struggling. Put on a short position on Friday, took the bait, and got short some S&P 500 and got short some financials into the weekend. And it sounds extremely bearish, but it is quite tactical and contained as far as exposure and outstanding risk goes. But here are sort of the reasons why I'm looking at it, or I put the trade on Friday. So we had a number of attempts here to take out this resistance. If you recall back on Tuesday, I was fairly excited, did some buying here on Tuesday for some tactical long trades, looking for this market to make a swift kind of momentum break higher. It did not happen on Wednesday, couldn't happen on Thursday, and again, it didn't happen on Friday. So a little bit of perhaps impatience on my part, but thinking that the market should have made that move if it were going to make that move quickly. And it being unable to do that was one reason for the strike against the breakout thesis there to the upside. Second is location, and this is pretty much the primary driver of it, is that we are getting this kind of gap up failure and nearly a bearish engulfing bar at a significant level here. The market made several attempts at those highs, it failed, and then this was a clear failure there. So I like the location for the tight risk for this trade, or the clear sort of stop out. For me, this is a tactical sort of reversal trade is how I would label it in my trading setup catalog. And for me, if we start taking out Friday's highs, the open of Friday, I am out of this trade. So I'm not willing to give this plenty of room. I'm not willing to plead with the market to work in my favor. It's going to be a pretty ruthless, tight stop for this position. If we see a nice enthusiastic gap higher tomorrow or on Monday, I will be out of this trade. So be sure you are aware of that. If Tuesday comes around and I say I no longer have that position on, and you say, "Well, I followed you into it," and so make sure you're aware, understand your time frame, and understand that I will not likely be able to give you any updates on this trade. So location, the inability to take out these recent highs, and two other reasons. One, which we sort of already touched on, is but just these weak closes that we are seeing. Take a look at all of these tails up here. So we got this tail up here, which means we failed to close the day near highs. We saw late day selling pressure. So we had that tail up here, closed near the lows on Friday, closed at the lows, big tail on Monday, small tail Tuesday, big tail Wednesday, sizable tail Thursday, and then again closing near the lows here on Friday. So all of these sort of weak closes do not give me a tremendous amount of encouragement here on the upside as well. Finally, fourth for the trade thesis here is the financials. The financials reported earnings. We had a number of large banks report earnings here on Friday, and we saw some enthusiastic price action into the open of the session, where we opened up near highs, taking out and breaking out here for the financials. Again, another excuse for the market to sort of take us higher and break out today as a potential catalyst. But in fact, those were the highs of the day. We continued to sell off. We sold off. We bearishly engulfed on the XLF, and we did it on high volume. So to me, that is also another sort of big strike there. I know on the face numbers, the banks did beat on earnings. I did not see any of the particulars or get into guidance or any of the other reasons of why we may have sold off on these reports. All I know is looking at this price action here, again, not a very pretty picture for a major sector of the S&P 500. So those are the sort of thesis for the short trade, the tactical short trade. Very importantly, there's no follow through yet, and I am completely aware of that, and that is sort of the way I like to trade reversals. In fact, is generally before this confirmation really comes underway. I like to get a position established with some tight stop losses, but we really want to see, especially for those of you who like to see confirmation, ideally next week we get a break below Friday's lows and we see a break of this trend line, which is where the market's been sort of marching higher up and losing these moving averages. That would be confirmation. That would give you certainly more confidence that the market is ready to fall back into this old range. I do think a move here to the upside or to the downside is coming next week, and probably early next week, and it may have to do with, you know, even if it's just a peaceful weekend of no headlines, no calamity out of Washington right now, because I know there's a lot of ruckus going on there on a number of fronts, and some, you know, even more serious geopolitical wise. Maybe if we have a very quiet weekend with nothing else that kind of sparks up, that might be reason enough to see the market gap up 1% and start its march higher and start to clearly put some distance behind this resistance and then start to move into this gap. That is a very, very possible situation. And again, if that is the case, I will be quick to be stopping out of the short position. So don't think you're going to follow me into it, or if you know if you know, there's going to be no updates from me on this position until Tuesday's video. So I could be out of this Monday at 9:32 a.m. So just make sure you know, you understand that if you're you know, if you're thinking about this for yourself. So that is that's sort of the thought process. That's the thesis there for the tactical trade setup. It's an aggressive setup. I understand that there's no follow through, and you know, again, we still want to see how this ends up resolving itself. We're nice and tight here, so I think we are due for some volatility expansion into next week. So that is the S&P 500. That is a trade thesis there on the S&P 500 as well. Let's look at the IWM, which was the bright spot in terms of the weekly chart. We did manage to take out the prior 2 weeks highs and reclaim the 8 and 20 period moving average. So from a structural standpoint, on a weekly basis, the IWM is the bull's knight in shining armor right now, because it does it is, you know, starting to take out and do some good recovery damage to, or recovery, some repair to the upside, and starting to get above some key resistance areas. So that is constructive. If we look here at the daily chart, you know, you could say, you know, for you pattern traders, if you look at some type of structural head and shoulders here, that might be forming. Again, this is all pretty early here, but if this was the high at 155 and we start to roll over here, then we have this kind of nice structural maybe topping pattern here, and you know, you could start to play around with that or think about that as a potential pattern to express. Otherwise, IWM holding above the 8 and 20 period. Again, the movement to the upside here is pretty steep. So if you take a look at this, again, this trend line, we're kind of at this apex here as we've been marching higher, grinding higher. We're coming into prior resistance. We're seeing a little bit of reaction off 155. Same thing next week. I think we're going to see a move here for the Russell 2000. I don't necessarily think these indices are staying exactly where they are for a whole lot longer. And the NASDAQ 100, again, same kind of action this week. Saw a nice move to the upside, 3%, biggest magnitude move, but wasn't not able to take out last week's highs. We saw the tail up here on this weekly chart, did reclaim the 20 period. If we go back to that daily chart here, we saw some weakness on Friday. So once again, when we start to look at this action here, we can look at the NASDAQ 100 as it starts to kind of wedge out here, potentially bear flag, whatever you want to label this, and something that we need to pay attention to next week for some follow through in either direction for some acceleration. So that is the market overall, giving some mixed signals and giving something a little bit for both sides, bulls and bears here. Right now, longer term structural support is holding. Short-term resistance kind of flexing itself, and we got a little bit of some perhaps volatility expansion into next week. So that's the market overall. Let's take a look now at some of the other majors. We'll go to TLT, which on the week was basically flat, 17 bips to the downside, an inside week, still sandwiched in between this 8 and 20 sideways moving average here on the weekly chart. So we are still, again, kind of pent up and waiting to see which way TLT is going to start to lean. Right now, bulls still holding on to that 20 period daily average here, and we got this trend line that extends from the lows here from February. So we are still holding above this trend line of support and the 20 period EMA here. This is probably going to be, again, a safe haven asset. If we see stocks get some type of sharp move to the upside, we would expect TLT to probably break down. If we see stocks start to break down, we'd expect to see TLT start to rally. So something to keep in mind, but right now we do have some short-term support still holding up. We'll go to gold next, which saw a really big Wednesday here, which was ultimately faded, but we had some big volume coming in here, and we saw this kind of rejection tail on the top end here, but not giving up without a fight. We still finished up nearly 1% in the gold ETF here, and you can see we didn't quite take out last week's highs, which was an inside week, but we certainly tried to get going this week and break out to the upside, but that was contained, and we are now back below this 128 level, which we've been talking about here for the past couple of weeks. Maybe even 128.50 or 128.25 or so is what you'd probably want to start to use. And we can see we are still sort of in this holding pattern now. Seems like it still just needs more time. Clearly rejected here, but not giving up without a fight. We didn't completely roll over into the end of the week. We are still kind of holding on, clawed back a little bit of gains here on Friday. So still like the prospects for gold to potentially break out in the coming weeks, but I still believe it does need a little bit more time. And silver also having a positive week, positive finish to the week, especially 1.62% on the week. And suddenly we are very quickly back to really 7 weeks or so, 8 weeks of very, very tight trading in silver. And you can see we are getting now towards the upper half of that range, which has been a while since we've been up here. Good volume this week. So again, for silver, gold, I think both of these are getting interesting here as they start to perk up and test resistance areas. Still think, again, for silver above 1590. We tagged it on Wednesday. That's the level we'd want to see taken out to the upside. And if we move over to oil now, oil had, again, a monster week, 8.31%. We cooled off for 2 weeks here. We sold off into this support. We kind of put in this dangerous looking over a ledge type of action here last Friday when we talked about it, and bulls stepped in right where they needed to. They defend this trend line. They defended a new higher low here, rallied us right into prior resistance, and then proceeded to break us out here. So oil momentum continues to the upside. Bulls are very much in control, and natural gas now getting underway here as well. 1.48% back to last week's highs, back to this 25.65, 25.70 level, which has been resistance. Natural gas has been sleeping for a while. I've been saying I do think some volatility is due for this market here sooner rather than later, and maybe we're getting a preview of it right now. Let's see how it starts next week. If it can take out these highs, natural gas could be a nice squeeze momentum trade to the upside. So that, I think, covers everything. Let's look at now our sectors here. We'll go right to the sector components on the week. We'll sort them by performance, and we'll look at what sectors, top 3 sectors here on the upside. XLE without a doubt here, 6% to the upside, very clean breakout bar. Would have preferred to see more volume on such a high magnitude move, but we still did make it above the 20-day moving average here on the weekly chart. But you can see just very clean breakout here of the past 7-8 weeks worth of trading. And if we go down to the daily chart, we did finish the week strong here in the green on Friday. So despite some broad market weakness, XLE did emerge here late, even on Friday here, and finish the week strong. So good performance there. Biotech also a nice winner this week. It was one of the worst looking sectors last week. We did mention that, and we did see a nice recovery from the carnage from last week. We were down 5.3% last week, up almost 5%, so basically recovered everything. But notice we have a lot of prior overhead supply in here, and we do have some declining 8 and 20 period moving averages. So bulls certainly have the work cut out for him here in Biotech, but a good recovery. This $100 level, very important support, which goes all the way back to June. We talked about this as potentially being a topping pattern here, was defended again. So going forward, I still think it's a very important, large, big line in the sand to pay attention to below 101. And I think you have a nice structural kind of short breakdown trade there. But for now, just like the indices, holding on to major support, that is constructive to see. And then finally, XLK, rounding out the top 3 performing sectors for the week. It did manage to take out last week's highs and recover the 8 and 20 period exponential moving average here. So that is very encouraging on at least a short-term basis for the XLK. If we go back down to the daily chart here, you can see we are trying to hold above now the 20 period EMA. Volume was pretty light here towards the end of the week, so we're going to want to see these gains held on to next week. I think that'll be important. Some basing action above 65 or so, that's going to be important. If we start to roll over, then certainly all bets are off there on this week's rally. On the downside, we had XLY discretionary. It was still a positive finish for the week, but if we go to the weekly chart here, you can see only up 0.5%, not doing a whole lot. It was an inside week right at the 20 period exponential moving average here. Remember, this has a large component of Amazon in it, and you can see now with Friday's action looking like it wants to potentially break down, kind of looking right over this ledge here. And if we look at Amazon real quick, that doesn't look too far off. You can see it rallied right back into some of these declining moving averages. It has this open gap now and kind of turned its head away from getting into that gap here on Friday. So again, heading into next week, I think follow through is important. Could easily be a fake out here, right? We could have just panicked everybody into the weekend, and if there's no bad news, if things look good on Monday, this could have been, a nice just shakeout move, which fuels the pop up into this range. If we start breaking above 1456 in Amazon, something to pay attention to, and I think that would obviously kind of translate nicely into XLY as well. If we start with a nice positive move up above 102 or so, then that would be off to the races. And XLP, also here, 32 bips to the upside, very tight inside week, low volume, not much going on whatsoever, below 8 and 20 period exponential moving averages here on the weekly chart. This chart still does not look good to me, just nothing too appealing about it. Some mean reversion, I get it, could be setting in there, but not too interesting, all things considered. And XLU, which is rounding out the bottom performer of the week, it was down 1.25%. Take a look at this channel. It's been kind of grinding higher in, potentially a big bear flag for a second leg down. That would be quite ugly for utilities. Right now, it's still holding on though. If we start breaking below 49.20 or so, think your short trade is on. We'll see if that actually happens. So far, it is still holding on. And financials was number 4, the bottom 4 weakest here. You can see it did still finish positive on the week, but just look at the size of that tail on the top end here. It's again going to need some confirmation. If we're going to see a bearish rollover here, we'd have to start taking out these lows around 27.20 or so. For my sake, because I am short financials, given the daily bearish engulfing bar there via FAZ. I am hoping to see some follow through next week, but again, stops are in place if that doesn't happen. If we see a nice rosy start to next week, gladly we'll stop out of those trades, carry the long exposure I have, and potentially build into it. So that is the weekly recap for this week's video. Hopefully you guys did all right there trading this week. Thank you so much, as always, for watching, tuning in, and getting through this video. If you do watch the whole thing, thank you so much for that. So have a great rest of your weekend, and talk to you on Monday or Tuesday.